Good evening, all.
Good evening, sir.
See, last week I had shared this MSME some recording YouTube. If you get time, please go through it. It will be useful for you. Okay, coming back to our session, we have stopped at non-current investments, I believe. I'm just going back to the schedule. Yeah. See, we had seen non-current investments like quoted, non-quoted, and all. If there are deferred tax assets, we will be showing in the net of deferred tax assets and liability here. And same way, it will be if it is liability is there, then we will show it under liabilities. Now let us go to long-term loans and advances. See, this other current line, no, one. See, non-current investment, this we had seen. Aggregate amount of quoted investments in comparison with the example balance sheet, whichever I have taken. I'm just taking that balance sheet also. Yeah, you are able to see, right?
Yes, sir.
Yeah. See, we finished property, plant property and equipment, PPE. And we have done quoted investments, aggregate book value of quoted investments, all these things. It was discussed. Now, next schedule was deferred tax assets. So, deferred tax asset or deferred tax liability, will be showing it. It is anyway deferred tax. It is anyway long-term kind of nature because you take depreciation also. It will be more than it will get adjusted more than 12 months. So, it is being shown here. Okay. Now coming to other non-current assets. In this example, if you see, there is only security deposits. That means the security deposits which we would have given to any authorities, like local authority, we would have given electricity, or maybe if we have taken some property on rent, then if the rental agreement is 5 years, 15 years, okay, all those security deposits also comes under non-current assets. Okay, so that is what here the schedule. Let us see what the schedule says. Other non-current assets. Okay. Long-term loans and advances. Long-term loans, there are no long-term loans advances here. That is the reason they have skipped that line. Okay, now from other non-current assets, it is going to current assets. So let us see long-term loans and advances. See, this is capital advances are there. What do you see? We have discussed while discussing the first part, that is, there may be advances to vendors for constructing of any particular capital asset. Then those advances has to be shown advances to creditors or capital advances under long-term loans and advances, because the asset which we are going to construct, it is of capital nature, so it has to be disclosed here. Next, coming to B, they have omitted it. Next, coming to loans and advances to related parties. see, related parties, if there are any advances given to related parties, then and it is in long-term nature. Okay, if it is not repayable on demand, okay, then it becomes long-term nature. If see, whenever there are related party advances, then you should verify the agreement, because you have to see what are the conditions. If it is repayable on demand, then it becomes short term, because we can, I mean, the company whichever is lending it can demand the money anytime. Okay, so they have all the right to demand immediately. So that is the reason we show it as short term. If it is not repayable on demand and the due date is going beyond 12 months, then we have to categorize it under long-term loans and advances. Okay, and giving details thereof. So what kind of advances you are given, you have to specify the details. Other loans and advances, if apart from those, if you have any other advances which are given, apart from capital advances to creditors, related party advances, somebody else also you would have given some advances, then it has to be categorized under long-term loans and advances. In that ABC, you have to show it. The above shall also separately subclassified as, same like how we are classifying creditors, debtors, secured, considered good, unsecured, considered good. The same classification has to be given. Okay, and it has to be for both the financial years. Okay, in brackets you have to specify earlier years, if what are the figures of earlier years. Okay, next, allowance for bad and doubtful loans and advances shall be disclosed under the relevant head separately. Suppose if it is a unsecured, okay, then you will not have any right to, I mean, you will not have any provision to recover that money. And if it is due for more than 3 years, then the recovery will be doubtful only. Most of, if see any amount which is without any transactions with the party and it is due for more than 3 years, it has to be considered as doubtful. Okay, then you have to make provision for that doubtful loans and advances also. Next, loans and advances due by directors. This I am not showing from the practical balance sheet because they do not have any category of this. That is the reason I am explaining you here. Loans and advances due by directors or other officers of the company or any of them, either severally or jointly with any other persons, or amounts due by firms or private companies respectively, in which any director is a partner or a director or a, I mean, see what they are saying, if suppose it is also indirectly related party. Okay, in those cases, suppose the director of this company is a partner in some other firm and that particular the company has given some advances to that particular firm. Okay, or it may be he is also director in the other company where the loans and advances has given, then all those things has to be separately shown with all the details. That is what the schedule says. Now coming to other non-current assets. Other non-current assets shall be classified as long-term trade receivables. You see here, never do you have in your experience, whatever you have worked or whatever financials you have seen, did you disclose any trade receivables of long-term nature? Mostly no, because the operating cycle which we were discussing, okay, is 1 year only, less than 1 year usually. But actually here, if you see, the operating cycle is 7 years, but I don't see any trade receivable shown under non-current assets. We do not know, maybe this is, we do not know actual transactions, so we cannot comment on it. But I am saying because their operating cycle is more than 7 years, there may be chances that basically they may not raise the invoice where the due date is more than 12 months. That is the reason there are no long-term trade receivables. But I can give one example where this long-term trade receivables will be there. Suppose in case of a contractor, especially in a real estate company, there will be a retention. Now, if you see, as per RERA, the contractor has to guarantee the customer for 5 years. Okay, so what the builder does is he will also retain the retention amount. Say you would have seen the contracts where 5% retention will be retained by the builders from the contractors. Okay, in that case, the contractor, this 5% whatever is retained by the builder, okay, contractor has to show it as a long-term asset only, long-term trade receivable. It cannot be a regular trade receivable because this 5% is very subjective and it comes only after 5 years. Okay, maybe like that cases will be there, or it may be like any machinery which is sold and the huge money is involved, and it may be recovered in various installments which is running more than 12 months. Then it has to be shown under non-current assets. Okay, see, he is very clearly telling long-term trade receivables, including trade receivables on deferred credit terms. See, the payment terms is deferred for more than 12 months. If it is within the 12 months, then obviously you will show it under normal trade receivables. Okay, so that is what you have to remember. Okay, next, security deposits. This is what we told: security deposits to local authorities, electricity department, all these things will come here. And any other deposits which are given, then it has to be disclosed here. Okay, long-term trade receivables shall be classified as secured, considered good, unsecured, considered good, doubtful. Allowance for bad, doubtful debt shall be disclosed under relevant heads separately. See, whether it is loans and advances, trade receivables, short-term or long-term, this disclosure is mandatory on as far as receivables is concerned. Okay, but mostly none of the companies will disclose this for loans and advances. Okay, but usually this is disclosed only for trade receivables, but as per schedule, you are supposed to disclose similar presentation for loans and advances as well. Okay, now coming to debts due by directors or other officers of the company or any of them, either severally or jointly with any other person, or debt by firms or respectively in which. Okay, this is same like loans and advances. Okay, now coming to for trade receivables outstanding following aging schedule should be given. You see, this is the new aging schedule which they brought in couple of years back. Okay, so this is again the bucket size is less than 6 months, 6 months to 1 year, 1 to 2 years, 2 to 3 years, more than 3 years, and total. Okay, and you see the nature of particulars under which this aging has to be given. Undisputed trade receivables considered good, undisputed trade receivables considered doubtful, disputed trade receivables considered good, disputed trade receivables considered doubtful. Okay, undisputed and disputed considered good and considered doubtful. Under these buckets you have to provide. Okay, outstanding for the following periods from due date of payment. Let us see in the present balance sheet how they are disclosing. Okay, you see here unsecured. Okay, unsecured considered good, receivables outstanding for a period less than 6 months from the date they became due for payment. Okay, less provision for doubtfuls, the provision has been deducted, and receivable outstanding for a period exceeding 6 months from the delay from the date they became due for payment. Okay, and total amount has been taken to balance sheet. Okay, and if you see the disclosure of aging, undisputed trade receivables considered good, undisputed trade receivables considered doubtful. Okay, this doubtful only they have disclosed above. Okay, here the format total is not there. Actually, it is not right. Total should be there. If you see the format, this is not the right way of disclosure. You see the format, there is a total column here, which they have missed it. I don't know why they have missed it. See, nowhere the total is there, either bottom or a column, either for the rows or for the columns. Okay. And this is disclosed for both the years, previous year and current year. So last year there were no doubtful. Only this year the doubtful has come. See, you see here we can suddenly there was no any outstanding for a longer period. Okay. See, suppose this particular 2,900 whatever they have disclosed as doubtful here. Okay, this it may be special case, but usually what will happen if this outstanding is running coming from 2 to 3 years or something like that, then there is a meaning in taking the doubtful. But here, if you see last year, if you see everything is considered good, suddenly there is a doubtful of 2,900. Okay, they maybe we have to. But prima facie, if you see there is, it is not justifiable like this. Okay, if any debt is outstanding for longer period and it is not getting realized, then only we are going to take it and under doubtful. But here I do not know. We have to see there may be some cases where there is a rejection of sales or something like that, and they got into conflict suddenly, something like that. We have to see the cases. Otherwise, if you see this schedule, then it is little ambiguity is there. That is what I am trying to tell you. Okay. Now, current investments. Current investment shall be classified as investment equity investments, investment in preference shares, investment in government or trust securities, investment debentures, bonds, mutual funds, investments in partnership firms, other investments specify nature. Okay, same like long-term investments only. Under each classification, details should be given of names of the bodies corporate separately, whether subsidiaries, associates, joint ventures, controlled special purpose entities. Okay, so if there are any related parties in this, you have to specify. Okay, the following shall also be disclosed: the basis of valuation of individual investments. See, basis of valuation has to be disclosed. With this, we have discussed in long-term investments. So the same way you have to disclose here also. Now coming to inventories. Inventories basically you can divide into three parts: raw material, finished goods, and work in progress, or raw material, work in progress, and finished goods. So the same thing: raw material, work in progress, and finished goods. Stock in trade in respect of goods acquired for trading. If there, apart from manufacturing, if there is trading, then the same what is there in stock in trade. Stores and spares, loose tools, others. Okay. This will be mostly for this tool stores comes under only for manufacturing entities. Goods in transit shall be disclosed under the relevant subhead of inventory. See, we have discussed this at the time of closing stock valuation, and this has to be disclosed separately. It is not clubbed under any of the heads. Okay, so that you have to remember. That is the reason when you are taking the closing stock valuation and all, you have to be very careful. And mode of valuation shall be stated. This also we have discussed, that valuation is very important at the time of taking the entry in the book, so that you are, see, the purpose why we have discussed those initial parties, that we are ready for the financials. That is the reason we are making all the points. We are summarizing all the points as a checklist, and we are seeing that everything is complete. Okay, so if you have done that job properly, then you will not get stuck here. You will immediately have the information with you, that what is the valuation and what is the value of goods in transit, and you will show it separately. Okay, now this trade receivables, the same way aging is there, which we have discussed under long-term trade receivables. The same bucket size is given here, less than 6 months. See, if you see one differentiation, the aging of trade receivable is different and the aging of trade payable is different. You see here, it is less than 6 months, but means 0 to 6, 6 to 1. If you go back and see aging of trade payable, you see here trade payables less than 1 year, 1 to 2 years. Okay, because if trade receivables are not coming for 6 months, then it is little dicey. Okay, either you have just reported booked, I mean, you have booked fictitious sales. Okay, these doubts you have to get. See, the purpose of taking aging is not just to report in the balance sheet. You have to start questioning yourself why it is due for 6 months. See, no company will have that much margin to give credit more than 6 months. Okay, so you have to think why it is going beyond 6 months. What is the issue? Okay, so please be careful when the aging of debtors is done. If it is going for longer periods, you have to make provision and you have to get into the details, and you should always have backup for this working bill wise. Okay, you have to have balance. Suppose there are thousand customers and there is 10 crores of due, but still you should have bill wise outstanding. Okay, if you go as an auditor, demand I need when customer wise, bill wise aging. Okay, not just punching the numbers and giving it to me. Then you have to get into the details where there are bills of 2 years, 3 years bill date, and it is not getting realized. Okay. Yeah, current investments. Okay, we have gone back to see the aging of creditors. Okay. Now trade receivables. Okay, unbilled dues shall be disclosed separately. Trade receivables shall be subclassified as secured considered good, unsecured considered good, doubtful. Allowance for bad and doubtful debts shall be disclosed under the relevant head separately. Debts due by directors or other officers of the company or same any related party kind of things. Okay, related party means even officers, I mean directors, higher management, all those things we have to take care. And if there are if they are also, whether they are not paid for longer period, all those things we have to be careful. Next, coming to cash and cash equivalents. Cash and cash equivalents shall be classified as balances with bank. You see checks drafts on hand. Okay, see, usually what will happen, even the customers also, to reduce their liability in their books, they issue checks on 31st March so that there is no outstanding in their books. Okay, see, they don't want to show huge liability in their balance sheet. Okay, so what they do, if they have got bank balance or OD balance or CC, then they will issue the checks and either they keep it with them or they will send it lately with 31st March dated checks to the vendors. Okay, that means if they are sending to the vendors, that means this particular company is under recipient side. So they might be holding those checks with the 31st March, and the customer would have told, you take the check but don't deposit till I say. See, all these things will happen. Okay, so if anything is there like that, you have to see when we go for audit, maybe after June or something like that. Okay, so you will find some checks of March. Okay, so that is helpful to this company also, because they do not have more outstanding like the debtors. Okay, so you have to be careful all these things, and see the schedule says you have to disclose this also, checks on hand. Okay, so you have to be careful when you are checking the debtors. You see whether everything is realized or whether it is still in BRS, bank reconciliation. Hanging checks are there like that. Okay, next, earmarked balances with banks, for example, for unpaid dividend shall be separately stated. Balances with banks to the extent held as margin money or security against the borrowings. See, this point we have discussed. See, suppose if we have some deposits and we have got some lien on the deposits, then it has to be disclosed separately. Same way, earmarked balances with banks. Suppose unpaid dividend is there and bank has earmarked that money for the purpose of payment of the dividend, then you have to show it that also separately. Okay. Next, repatriation restrictions, if any, in respect of cash and bank balances. shall be separately stated, where we have got export sales, and if there are any restrictions in those realizations, then the same has to be shown separately. Then bank deposits with more than 12 months maturity shall be disclosed separately. See, though it is a bank deposit, if it is less than 12 months and more than 12 months, again you have to show it separately, which is more than 12 months, like that. Okay. Then short-term loans and advances to related parties, others. Again, you see here secured, considered good, unsecured. You have to classify this also as secured, considered good, and secured, unsecured, considered good, and doubtful. If you are doubtful, then you have to make provision for the same. Okay. Again, here also the directors, officers of the company, you have to show it separately. Other current assets. See, these loans, advances, trade receivables, whether it is short term, long term, both the cases, then the disclosure aspect is same. There is no much variation in those. Only thing is within whether it is a short term or long term, secured, unsecured, whether it is a related party or officers or directors of the company, the same structure will come. Okay. Other current assets, this is all inclusive heading which incorporates current assets that do not fit. Okay, this is a general categorization. Wherever it is not falling under any of the other heads, you can show it here. Okay, now let us see here which if they have shown something. See, cash and you see here, you see on cash and cash equivalents, you see on current accounts earmarked. Okay, on current accounts, banks have earmarked something. Okay, they would have given such details also. Okay, bank balances available on demand deposits with originally maturity of 3 months or less included under cash and deposits due for. You see here, very nicely they have prepared this balance sheet. I liked it very much. You see, whatever we have read here is being disclosed here. Okay. You see here, just now we discussed where the deposits are more than 12 months, you have to show it separately. To be very frank with you, I have not shown. In my experience, in my career, I have not shown. Okay, but they have shown it. I felt very nice of this balance sheet by reading, because it was learning to me also. Next, details of fixed deposits with banks. Okay, this is because they have taken a lien. I mean, the deposits are under lien because of some bank guarantees. Okay. Now coming to short-term loans and advances with related parties, loans due from wholly owned subsidiary, loans to related parties, advances with related parties, other advances. Now other assets, other current assets, see what they have shown. Interest accrued on bank deposits, interest accrued on loan on related parties, other receivables from related party, TDS receivable from NBFC. Did you observe this? Did you see this TDS receivable from NBFC? Why NBFC will pay the TDS to him? Either they had deposits with NBFC. So let us see cash and cash equivalents, whether they have got any deposits. Other bank balances in fixed deposit accounts. Bank balances on current accounts, earmark cash on hand. Okay, it is not there. But still you see there is a TDS receivable NBFC. I will tell you this is mostly, see, maybe if you remember when I was telling you borrowing cost entry, I told if it is a NBFC, you are supposed to deduct the TDS and pay EMI. Okay. But EMI, if you deduct the TDS in EMI, NBFC will show after 3 months yours as a NPA account. They will say, see boss, I have given you 1,25,000 as your monthly EMI and you have deposited only 1,11,250, whatever, after 10% TDS. So it is due for more than 3 months. So your account has become NPA. Okay. So usually the process of if you seen it here somewhere, it's good. Otherwise, I am telling you, to those who did not come across this situation, there may be that the situation may be like this, that suppose 1,25,000 is the EMI and 12,500 is the TDS to be deducted under 194A. interest other than interest on securities. Okay, 194A. Now, these people, this particular company, whichever we are discussing now, they would have paid the entire amount of EMI. Apart from that, they would have paid the TDS also. Otherwise, it will become non-compliance. Then it will not be allowed as deduction under Income Tax Act, not entire amount, 30% of the total expenditure. Okay, all these things will come. So what they would have done it is, this is my assumption. I do not know. I have not seen their books. I am just telling you. They would have, what they would have done, they would have paid 1,25,000 as EMI, which includes interest. And apart from that, they would have paid whatever TDS applicable from, see, I will just correct, 1,25,000 if it is EMI, interest will not be 1,25,000. There may be some 40,000, 50,000, whatever may be the interest portion of the EMI. They would have deducted that TDS and they would have deposited to the exchequer. So this, whatever they have paid TDS has to be recovered from the NBFCs. So what they do, they would be sending a quarterly certificate to the NBFC and they would be requesting to repay their deposit by checking their 26 AS. Maybe this may be that TDS what I feel. Okay. There may be TDS receivable from banks on fixed deposits also. Okay, but if you see here, if that is the deposits, if they have kept with NBFC, but no such disclosure is seen here as deposits with NBFC. Okay, see, other bank balance only they have said, not NBFC. Okay, so I don't see any deposits with NBFC. That is the reason I am presuming that this may be TDS deducted on interest on EMIs paid to the NBFCs. Okay. So I think we are through with balance sheet part. Wednesday we will quickly go through. See, this whatever P&L aspects are there, we have already discussed. Okay, so we have to just go through the format. Then we will move on to financials of non-corporate entities. First, we will do with the LLP. Then we will see partnership firms. Okay, I think I will conclude with today's class. Thank you.